Yo, 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 yo. Power Plays Palace, man. We back again. We are back again and we are off. Let's do it today, man. Interesting day in the market yesterday. But y'all know how SPY is. As soon as you think you got it figured out, here we go again. So let's take a look at the chart for today. And let's see what we got right here. Boom. So yesterday we were looking for, if SPY was to break above the pre-market high, then we were looking at a moves up in the range of 755.58, 757, 758.50, and 760. If we had a pullback to the pre-market low, and then we had a push up from there, we were looking at 754.60, 755.58, and 757. And so what that was like I told you before, when you go below certain levels, then you don't forget about key levels that were passed on the way up. And so that's where we are right now with that. Now, on the bearish side, we were looking for, if we got a pullback, where we got break up towards resistance and then a pullback, we were going to be targeting 750.21, 747.50, 748.75, and 746. And the reason we were going to be looking at it that way is because until SPY really breaks into one of those key areas and zones and it holds, honestly, I view that as the chop zone. Try to be very careful trading in between the pre-market high and pre-market low, especially when the market first opened. And I know lately you've been getting some big moves here and there, but we want to definitely do that. So let's look at the chart from yesterday and see what happened with the SPY. Alright, there's our chart from yesterday. Let's zoom in on yesterday. I know y'all see that gap over there. We're going to get to that gap. Alright, so right here, SPY opened up at 752.79. And it ran all the way up here to 754.57 and established that high today. Now, once it established that high today, it began to pull back. And once it pulled back, we got to 747.88. And from there, that was the low of the day. Now, you see that it really had sustained pullback all day. It really was. So if you bought puts early in the day, after the first 15, once it established this high, it started to consolidate and get these resistance candles or reversals here, and you start to see it pull back. If you bought puts in this area up here, then you pretty much had a pretty decent day of some pretty good gains, honestly, because it just pulled all the way back pretty much all day until 3:30, and then from there it began to push up. Now, this is the 15-minute chart I'm using this morning because there's a lot of candles in there with this on the 5-minute, and I want it to be kind of clean for you. I'm going to switch over to the 5-minute so you can kind of see all those candles as this thing was forming up. But as you can see, it was pretty much, money in the bank all day if you bought puts. Now, you see right here on the 5-minute, you see where, and this is one of the reasons people go down to the smaller levels before they enter a trade, even if they're on the big, using a higher time frame, is because what happens is you can see these little areas. Like on the bigger chart, you don't really see this as a pullback area, but that really is an area where you could have got in right here again on some puts at 754 again, and then you could have rolled these things on down. And then you see other areas where you could have got in at, like right here at 1255 was another area you could have bought in, and then you would have got another almost $5 move down from there. So overall, it was a $7 move, almost $8 move down, and you could have got in on that, depending on where you got in and what time you got in or wherever you started trading. Just looking at the market. And so that was what happened yesterday. And so based on everything on our SPY trade plan, once it started, it rejected out of this 754 area around this pre-market high area. Once it rejected, it started to pull back. It started to pull back. And even if you waited till it got below the pre-market low, like I said, some people can trade in this area. Now, if you get here and you see this first rejection, like we talked about, support becomes resistance and resistance becomes support. Now, if you get in here, you see this thing going up, and it went up to the 754 area where the pre-market high was 754.60, and then rejected off of that. If you see that, especially in the pre-market, are you watching it as the market opens and you see these levels here in this chart, you can actually play these levels in reverse. So, you know, you could have got in at that rejection and rode it down to the 751. I know some people that actually do that. You know, they'll play it and ride it back to the pre-market low, which would have been a $3 move, and then you could have, you know, then you could have kept going if you, depending on how many contracts you got. But that's something that can, and sometimes you can get, you know, you can do that, you know, but you definitely want to be careful trading in that chop zone, as we call it, and that's why you see the charts look like that now. They'll look like that a little bit on some days, but that chop zone is very dangerous. It's very volatile in there, but that's why, you know, I want to make sure we emphasize that. But as far as yesterday, though, you can see it. It lined up. You could have rolled it all the way down. We at 747.88, and then I'm gonna go back to the 15-minute chart just for visual purposes this morning. Now, after that, you see it pushed back up last night to 750.83, right at the end of the day, and it consolidated a little bit, and then it started to go down. We got to 749 before it closed at 8 o'clock, and then this morning it opened at 744. I said 789. It started at 749, but you see right here, it opened up at 744.75, so it was a $5 drop, and then it proceeded to work its way over and go down to 742.57, and now you can see right now it's 8 o'clock. Right now on the dot, it's like an hour and a half before the market opened, starting to work its way back up, and then you can see it's gonna try to, I think, you know, before the market opens, because it's so early, it might retest this 745.85 level, and maybe make a push towards the low of the day from yesterday, 747.88. So we'll see how that goes and for the rest of the pre-market, because it's an hour and a half left. But that's where we are currently, and that's what we're looking at right now. So let's take a look at the chart for today. All right, so right now we currently have a pre-market high of 745.82, with 742.57 is the pre-market low. As I just showed you on the chart, though, you see it might challenge that pre-market before the next hour and a half. But what we'll be looking at, if it breaks and holds above that 745.82, and what we want to do is we want to look for an entry around 745.82, and then what we're calling our confirmation break at 747.88, which would be the previous day's low. With our stop losses, we're going to set that below the 744.75 area, and then we're going to go up to 747.88, be the first target, and that's where the confirmation break is, the 750, 752, and 754.57. And if we get a pullback before the market opens, before it pushes up, then we're going to look for a target, especially if it comes back down to the pre-market low. We're going to look to target 745.82 and 747.88. And once it breaks and holds above those two levels, then we'll continue on with our 750, 752, and 754.57. But if it pulls back, it'll have to get back to those levels before, and break and hold those levels before we can get into those high levels. But those levels will not change until we start to conquer those. On the bearish side, if we get a break below the 752.47, I mean 742.57, because we want to try to avoid the chop zone really at all costs. After we try to break through the pre-market high, we'll set our stop loss above the 745.50 mark, where the VWAP should be around that time, and then we'll be looking at 741, 739.50, 738, and 736.50. And now understanding that's going to be based off a continuation of turning support and resistance to support and support to resistance. If it goes all the way up and tests these levels, the previous day's high, or if it make it back up to the previous day low, the previous day low, and it breaks through the pre-market high today, then if it starts to retreat, then those are the first levels then you target back on the way back down, because those are key levels. It's just that once they break past it, they become support for the move up if they're going up. And the same thing if it comes down and it starts to work its way back up, those levels that were once resistance become support. And that's how that goes. So that's our trade plan for today. We want to try to stay disciplined. Please, follow the rules, stay engaged, and if the trade don't look good, get out of the trade. And then we're going to see what happens. Remember, this is not financial advice. This is just some ideas from a person that trade every day. And now, you can take this information if it helps you. Hey, like, share, subscribe to the channel. Share it, again, I'll say share it. And then, follow the plan. And if you trade based off of what you see, post, what happened and how did you follow the plan. So kind of make sure, that, I understand that how I'm providing information to you. And like I said, this is not financial advice. These are just ideas from a person who trade every day. But I want to make sure that when I do provide the information and advice, it's in a way that can be used to help somebody, whoever sees it, if they want to use it, become a better trader. Develop an idea for what we're doing, and even just learn based off of what we're showing. And so that's our trade plan for today. And what we want you to do is get the information, get your trade in, set your levels, stay disciplined. And if it don't work out, live to fight another day. That's Power Plays Palace, man, and we out, man. We'll see y'all on Monday.